Hey everyone, hope you're doing well. This is the Deep Dive. My name is Drew Creekmur. I'm a wealth advisor here at Creekmur Wealth and the director of advisory services. And today, this is a solo episode. Unfortunately, John and myself recorded an episode yesterday, but I was having all sorts of camera and internet issues, and so it was not any good. And so I am re-recording here today, and we'll run you through the same basic conversation that we had. So first and foremost, as of Labor Day of 2023, the TD and Charles Schwab merger is going to go through. And this is something that we have been working on for a few years now. Charles Schwab acquired TD Ameritrade about 2 years. They've received federal regulatory approval, which was a little bit surprising considering Charles Schwab is the largest brokerage platform in the United States, and TD Ameritrade is the third largest. And so what is really going to be the outcome of this is that Charles Schwab is going to keep their world-class service team, and they're going to adopt TD Ameritrade's world-class technology platform. And how it relates to you, there really is going to be no major changes to you. Your online login is going to stay the same. Your accounts are going to automatically transfer over to Charles Schwab over Labor Day weekend, and you won't have to actually sign any paperwork for that to happen. And otherwise, the only thing that will really change is your statement will say Charles Schwab instead of TD Ameritrade. This is something that we are staying very much so on top of, and there'll be some more communication coming from our firm and also from Charles Schwab. And when you get those letters from Charles Schwab, you really don't need to do anything with them. You don't need to sign it. You don't need to return it. It's really more of an FYI that they are required to send out to everyone who will be a part of that merger. So we're staying on top of that. But if you have any questions, don't hesitate to reach out to your advisor to discuss it. Now, the big topic that me and John discussed is one that is really, really hot in the news right now, and that's AI, or artificial intelligence. And it kind of works out actually that we have to re-record this episode because one of the largest companies in the artificial intelligence space, NVIDIA, actually reported earnings last night. And they were pretty phenomenal to say the least. And so I'll just kind of run through big picture where we're at. Me and John actually started talking about doing an episode about artificial intelligence when I was at his house a number of weeks back, and we watched a 60 minutes episode where the CEO of Google was being interviewed about artificial intelligence. And so we had a very interesting discussion about it. But big picture, artificial intelligence is really the next step in the technology innovation space. There's been a great example. This would be the shift to mobile that happened about 10, 15 years ago. That was really the last major seismic shift in the technology space. And artificial intelligence is actually a trend that we've been tracking going back actually to about 2016 when we began investing in some clients' accounts when appropriate for those who wanted to take higher risk in individual stocks of the company NVIDIA. And I mentioned them earlier, so I'll go into them a little bit more. But NVIDIA produces one of the best semiconductor chips for artificial intelligence. They also actually have built out the software that will be utilized to program those chips. And so when we think about who is going to be the big winners of the AI trend, it's going to be a handful of semiconductor names like NVIDIA and AMD. And there's going to be a lot of the very large data center providers like Google, Amazon, and Microsoft. Some really interesting numbers that stood out to us when we were doing research on the topic had to do with one hand with the hyperscale data centers. So that's Amazon, Google, and Microsoft. Back in 2021, they generated about $82 billion in revenue. Fast forward to 2030, at current projected growth rates, those numbers are expected to be just shy of $600 billion in a decade, which is pretty incredible to think about. And when we think about the chips, back in 2021, the market was $11.2 billion. And by 2031, it's expected to hit $263 billion. And right now, NVIDIA, the reason their earnings were so fascinating, they're actually up about 26% today alone, which is actually incredible that a company that already has a market cap of $700 billion is able to actually increase by 26% in a single day. And the reason that happened is because of what they said in their earnings report. And for those of you who've watched the deep dive, you've heard me and John talk about how earnings of companies is ultimately what drives the stock market. And essentially, they raise their revenue so much for their fiscal year ahead that the stock just exploded. And the reason they were able to do that is because they're seeing massive deal flow from the large hyperscale data centers like Amazon, Google, and Microsoft and other names that are really, really purchasing a lot of their semiconductors and their software development platform. Over the last decade, these companies have invested billions and billions of dollars into a wide array of areas. And it's really important what companies are investing in because that ultimately is going to tell you what their future growth potential looks like as it relates to their revenue and as a investment in the stock of that particular company. And what's really interesting is the largest tech companies, Facebook, Apple, Microsoft, Google, Amazon, they all said in the most recent quarterly earnings that for the first time in a decade, they are not going to be increasing the dollar amount that they're investing back into their business. But what they are going to be doing is reallocating the capital expenditures or investments into different areas. And so they're not going to be investing in real estate or in hiring more employees or in different programs. What they are investing in is in artificial intelligence and in data centers. And so this obviously relates to a ton of new dollars flowing into the AI space. And it's been a huge reason why we saw, for example, NVIDIA stock absolutely explode after this last quarter. So what I would encourage all of you to do, if you have any more questions about this, is to obviously reach out to your advisor and have a conversation with them. Right now, through a number of different ways, you probably have some level of exposure in your investment accounts to this trend. But if you want to have a deeper discussion about possibly increasing that, or if it's even right for you to be investing more into those areas, I would definitely encourage you to reach out to your advisor. So thanks for the time, guys. Hope you're doing well, and we'll talk to you soon.